Did you know that ARK Invest raised the Tesla new stock price to $20,000? Stay tuned and keep watching to find out why ARK Invest did this and the evidence to support this claim. A lot of the investment companies carefully consider the company's stocks or bonds before investing in them. The economy and stock market are also to be considered to make a sound decision. The progress and movements of Tesla stock is one that analysts and investors keep their eye on. Even though Tesla stocks have constantly been fluctuating, investors are still clamoring to buy in, since Tesla is said to flourish more hereon. In today's video, you'll find out why ARK Invest raised Tesla's new stock target price to $20,000. According to experts, analysts, and investors alike, the second quarter of 2022 will make Tesla investors rich. This is based on Tesla's developments and accomplishments in the first quarter of this year. What are those, you may ask? Tesla reported having delivered 310,048 vehicles in quarter 1 of 2022, which was an increase of 68% from last year. Additionally, Tesla said quarter 1 2022 net income was $3.3 billion, a quarterly record exceeding Wall Street estimates as revenue surged 81% year over year to $18.1 billion. In fact, according to U.S. News, TSLA rose nearly 700% in 2022. Tesla went public in 2010, offering 13.3 million shares at $17 per share. With a market capitalization of around $800 billion, Tesla is the world's largest automaker by value. Although the company reported $31.5 billion in total revenue for 2020, its current market cap is nearly $800 billion, which is more than enough reason for investors to keep piling up. Tesla has grown into the largest car company in the world, and now sits comfortably atop the industry and appears to hold and maintain that spot. ARK Investment Management LLC, or simply ARK Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovations and offers investment solutions to investors seeking long-term growth in the public market. As of February 2021, the company had $50 billion in assets under management. ARK Invest was founded and is managed by Cathie Wood, an American investor who is called the most underrated investor in the game since she is incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. That said, look for why ARK Invest updated Tesla's valuation model with a $4,600 price target in the best-case scenario for Tesla stock in 2026, and up to more than $20,000 by 2030. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. The bull and bear cases, tuned into the 75th and 25th percentile Monte Carlo outcomes, respectively, are approximately $5,800 and $2,900 per share. Do you share the same opinion with ARK Invest? Let us know what you think by leaving a comment in the comment section below. According to ARK Invest, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. In ARK's 2021 open-source Tesla model, they outlined their expected value of $3,000 per share in 2025. However, they updated this stance due to material changes, including autonomous ride-hail assumptions and inputs, capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. The updated model by ARK Invest shows updated assumptions for the total market for autonomous ride-hail at each price point and the probability that Tesla will solve for fully autonomous driving. Based on their analysis of consumers' perceived value of time, they expect more demands for autonomous ride-hails at higher price points than originally modeled. Research suggests that travelers in Western markets place a value on their work-related travel miles close to their hourly wage and value their non-work-related travel miles at close to half their hourly wage. ARK assumes another long tail of demand in low-income countries, and at 50 cents per mile, priced similar to ARK estimates the total addressable market for autonomous ride-hailing at roughly $11 to $12 trillion. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have updated how the robotaxi business feeds into the model. Although in the past they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026. Although 4 years later than Musk expected, they also suggest that Tesla will commercialize autonomous ride-hailing in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If, and only if, robotaxis commercialize within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure increment unit of capacity had improved from around $84,000 in 2017, when the Model 3 was ramped up, to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. While these improvements indicate that Tesla could continue to increase margins, the more important takeaway is that capital no longer is a bottleneck limiting its growth. Instead, Tesla should be able to grow as quickly as management bandwidth and supply constraints will allow. The model accommodates these constraints by limiting arbitrarily Tesla's production growth in any given year using the max annual production increase input. Tesla's ability or inability to scale is a critical driver of its business outcome. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK Invest's lowest price per share scenarios, Tesla launches a vertically integrated human-driven ride-hail service but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable, recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla still could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. Through a published article, ARK Invest stated that, although tuned to our expectations for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026. The terminal multiple used in ARK's model is probably too relative to Tesla's likely growth in 2026, a conservative modeling practice at ARK. As a result, share price expectations are highly sensitive to the year of the price target. Using the existing assumptions in the model and extending them to 2027 results in a materially higher price target and compound annual rate of return. This effect persists if they extend the current model to 2030. Still, they have not tuned the model explicitly for that time horizon, raising the risk of potential errors. By 2030, for example, vehicle form factors could change significantly relative to those in the current model, and some of the business opportunities that have not been modeled, AI as a service for one, could be more meaningful contributors to Tesla's financials. Overall, ARK's price target for Tesla is $4,600 per share in 2026, with the updates in their recent model. The bear and bull cases suggest that Tesla could be worth roughly $2,900 and $5,800 per share in 2026. It is important to note that these predictions and assumptions are subject to check, depending on the economy, which then affects the market prices and stock prices. Still, an established investment management firm made these predictions, which makes them worth considering. Of course, these numbers and data from ARK Invest have been based on their careful consideration and thorough study of Tesla, its stock movements, along with its recent innovations. For more Tesla stock content, make sure to visit our channel and watch our other videos.